Hi, it's David here with Future Trading. I want to cover the universal trend as well as that price action method. I haven't done this in about a month, so we want to go ahead and go into that. I'm also going to talk about the long-term position with that weekly, and we're going to take a look at some of what I said in that video. But before doing so, my subscribers, if you don't mind, participate a bit more because I'm again putting in a little bit of effort here trying to draw these charts up to present the information to you. So if you don't mind, leave a like, leave a comment, let me know you're retaining the information. If you're new to the channel, welcome and thank you for stopping by. I hope my explanation of price would make sense to you today. And I want to give you some foundational pieces on how trading actually works. All right. So it's not in the elaborate explanation of price that's going to get it to work. It's the simplicity that should cause your trading to, I guess, take a turn for the better if you're struggling with it. I know if you struggle with trading for a while, most people gravitate towards long explanations when it comes to price because they think that it should be hard to understand trading, but it's not. And so the shorter the explanation, I find, actually is the thing that tend to get stuff to work, especially if you're professional doing something. That's the other part, because being a professional has nothing to do with sensationalized trading and all of the stuff that YouTube presents to you. It's not that. Professionals just have a specific knowledge. That's all. It's just knowledge. It's a knowledge base. And so if I can share with you the experience that I have in a very condensed, digestible way, then you should be able to take away the information and be able to apply it with confidence. So you want to be able to see the information repeat itself over and over and over again. And that's how trading should be. So let's get into some of the information. Again, I want to give you the whole experience. So we want to get you a foundation with the trend. Want to let you know how far it can go, and then we want to put you in it and have you hide your stop behind real participation. That's important. Want to give you the whole thing, not fragmented. All right, and that's important. Let's look at this weekly. All right, so they're getting a rotation here. They're getting a rotation. That's off of the 550 up to the 650. So 16.5 15.5. Okay, so 6,500, 5,500, 55 up to the 65. Stop one tick outside of that 65. But if they're trying to play it back to the upside, all right, so I'm just kind of give you a little bit more information before we dive into the foundation of trading. For those that's been following me, all right, so we will go 5,500 down to the 4,500 or 15, let's say 15,500, 14.5. Okay, 14.5. All right. Now, you want to see them not go back outside of 14.5, but they can stay inside this area and just climb up to the 85, 95 area. All right. So we kind of want to get them up there. I put that in the video from the long term, and that was back on 8:15. Coming down into this turn, you could have caught it at 12.5, 2,500 down to the 1,500 or 11.5, and then 11.5 down to 10.5. All right, so you could have picked that up in order to catch that run. They're running into the participation bars here. However, we do have a downtrend in place, and here's this expected distance, if you will. It don't have to work. Clearly, it don't have to work, and that's why the question mark is there. That's the zone from the daily. We'll take a quick look at that, and then we're going to proceed on because we got some news at 8:30, and we're going to take a look at the FOMC as well, kind of look back at what that was and how the trend and our price action method works with that information. All right, so want to see them hold this. That's important. I know we have a trend here. Hopefully they won't go down. I know the world got a lot of stuff going on in it right now, but if they can, let's just see if they can keep going to the upside. Now that's the daily. And on this turn here, again, I gave you targets to the upside back on the 26th, which was last week. And then this is the turn. Let's get this low, 303, because this bar's high is not touching that mid. All right, so 303. Okay, that's the low, the L. Okay, and then they came in with the test here. Let's get this low, 311 and a quarter. So they never would have kicked that stop here on this bar, and you could have took that ride back up here. All right, now they've done trend, but didn't make the trend distance twice so far. They've done it, and it failed both times. Let's see if they can hold it this time, given that the weekly is still above its center and just slightly beneath the upper part of the scale. We're just right above it clearly now. We were trading just slightly beneath it, but we're above the center of the scale now. And let's see if they can hold it. I told you I do not like what's down here. I think that this one made more sense. This one didn't. And I don't like this at all. But given the location of the weekly and what I want them to do, hopefully it will happen. All right. Now, this is important. If you are new to the channel, I want you to understand that this is what this channel is all about. It's not fragmented information. All right. So I give complete context. Really important. All right. I give you trend direction. We're going to do that in real time. We're going to do the trend distance and which bar gives that participation. This is the one I'm going to really make emphasis on because this is important. And then, of course, the turning points. I'm going to touch on it a little bit, but not as much. And I'm not going to really dive into this right here. But I am going to point to you what the targets are. I'm going to point to you some of that information. Now, the target, we can talk about this spike. I did outline that on the chart, and we want to talk about the FOMC. We have some targets above. Now I gave you these targets. We got some targets above up to, I think it was 309. Yeah, 309. I gave you the 309 target back on the 24th of last month. 24th. Let's go back here and take a look. All right, so yeah, on the 24th, price was here. And I gave you that 309 as well as some downside targets. Now I told you if they wanted to get that 309, which I knew they was breaking through that daily, they should go down. Dimitri, you definitely know that because I gave you that information 7 days before it actually got down there. So really important. They made that first target that was there, and then of course they worked their magic beneath the center of the chart and just kind of kept going lower part of the chart, hit that second target, and then it was one more, and they hit that one, and that's when I gave you the long side targets. And that was on the 26th. Now you can use the ranges again. You can pick that information up. All of that information can be found on the channel. If you're not viewing this on the channel, let me just show you where it's at really quickly here. If you want to grab those ranges, it's here. All right, so here I put this out 5 months ago. You can grab the ranges. I even talked about the static levels as well as the chart scale. Tried to give you all of it. If you want to see me cover the chart scale, here's a section that's dedicated to that exclusively. All right, now let's go ahead and take a look at what they did when I gave you the upside target. I told you that there was another one right above it, like 860 or whatever, and they managed to hit that one as well. They made that long side target. The FOMC came in somewhere in this area over here, like 2 o'clock. So it was like over here. We're going to take a look at that. And so they're on their way. So it's not random. It's not that you can't know where price is headed. At least that's what I do. Again, this is information that I do off screen and what I teach people how to do should they retain the information. Now, 309 and a quarter, really important. That's where they're going. If not, we're going to take that dive. Now let's take a look at this chart. Now let's talk about what's happening here. I know we got news at 8:30, so I'm gonna try to go to the news, but then we'll come back to some of this. It's like right now, it's like let me refresh this chart. It's like 8:25. 8:25. So we got like yeah, the clock is up here. 8:25 right now. So this is the price pattern. So if you're new to trading, this is how it works. We need that mid above the high. So the mid of this bar needs to be above this high. That's a no close bar. This is the hard stop. We need the mid of this bar beneath this bar's low. This is a no close bar. That is the hard stop. So this is the participation scenario. Really simple stuff. All right. Now, time. I want you to understand that this is key when it comes to trading because the invaluable is down here. So the invaluable is down here. They're going to protect this at all costs and they're going to do the best that they possibly can to throw your timing off. And when I say global entities, institutions, whoever is pushing them buttons trying to make this market move, they're going to do their best to make sure that your timing is thrown off. And so my job is to help you with this. This is priceless. This has value. This is invaluable. So it's priceless. Really important. So time is the continued sequence of existence and events that occur in an apparently irreversible succession from the past through the present and into the future. Now, this is the key part right here that I want you to hold on to. The past, present, and into the future. So just like you were born, you can't go backwards. And so you went from a toddler to a teenager and then an adult. Well, trends work the same way. When you get a trend, that's the past, it gives you the present, which is the manipulation back and forth before they inevitably get to the trend distance, which is the future. So your trend distance is this, and this is your paycheck. They're telling you how much you're going to make when they give you the trend. It's really important that you know that. Now, it's all about procedural knowledge. You want to make sure that you understand what a procedural knowledge is. What procedural is related to an established or an official way of doing something. So there's not a various different ways to do it. It's not. Trading has just a simple function to it. There's so many ways people would try to explain it to you. I'm gonna try to explain it to you based on what the chart is telling me. That's it. It's not my thoughts on it. It's what the chart is actually doing, and that's it. And so we can, I guess, derive all kinds of concepts about it, throw all kinds of indicators on the chart and say, hey, now this is doing this and this doing this. This is what's making for the trend, the chalk, the breaking the structure, this trend line. You can do all of that stuff. But at the end of the day, the chart is telling you what it's going to do. And all you're doing is adding more information on top of it, which doesn't take away from the information that it's giving you. Now, you want to add all this other information to bring about any kind of validity in your understanding that now it's going to head in that direction. It's totally up to you. But I want to make you aware of it's the market's movement that's going to tell you that it will keep going. It's the market's movement that'll do it. And so there's an official way of doing something. You can ask any doctor from here to somewhere across the world. They're going to say, hey, when we operate on people, there's an official way that we do it. And so it's not a various different, approaches that they'll do when it comes to correcting something that's going wrong. All right. So they're going to go in there and pretty much do the same thing no matter where they're at in the world. Europe, here, it doesn't matter if you're a physician and you're taking on the responsibility of people's health. It's going to be the same thing. And proceedings in courtrooms, same thing. They're going to do the same exact thing over and over and again. And it doesn't matter who's involved. Now, what we're going to do is we're going to come back here because I know it's coming up on that news, and I do want you to see the volatility with that information. And we're going to cover all of the FOMC. We're going to kind of go back there, and then I'm going to come back and read it in real time for you some more. But I definitely want you to see what's happening right now. So let's see if we got our trend down. Now, our trend is 7 bars, so you need 7. So we have 1, 2, 3, 4, 5, 6, and there's 7. So that is a trend. And then you get the center of the trend, the COT, center of the trend is here. And there's the trend distance, and they made it. So now let's see if we got 7 here, which I can tell you we do. 1, 2, 3, 4, 5, 6, and there's 7. And so now the center of the trend, okay, let me just kind of put this here. I'm not going to do the text. We're just going to do the lines here. The center of the trend would be roughly here. All right, so now let's see how price responds. There's the news. They already made the trend distance. All right, so they're telling you what you'll make. And they made that distance. All right, so they traded right into the center of the uptrend. They traded right into it, hit the center of that uptrend, and taken back off. So this is not so much necessary, but I'm gonna still do it nonetheless. Let me just put this here. So we're not gonna worry about the distance because they didn't make it, but I am going to just turn this red so you'll know that that was the center of the trend, and you kind of saw them again fall away from it and gave you that trend distance. Now, well, let me put this here. Let me just put it here. Let me put this here. Now, as the mid of the bar, that black marker that you're seeing, as it trades away from the high of the bar, clearly you can already see that they're doing that. As they trade away from it, they should continue on. It's really simple. Just want to make sure you see the news. All right, so that's the trend and the trend distance. All right, so trend distance. We'll go back and take a look at that other information. Okay, so here's the mid of the bar here. Now, this mid is still located inside the bar. You want to, let's do this. I'll just put on the proper count real quick. Let's do this. I'm gonna take a trade for you, just to entertain you. This is the PA account, so it's not the practice one. Let's do this. Got several of them. I got to trade today. I'm gonna just give you a little bit of information here and do this as well. When that mid, I wanted to see them come down a bit more, but when that mid gets above the high of this bar, that's the setup. If the mid is still located inside this bar, you're going to probably get the overlap. So that back and forth. Now, clearly, as large as this bar is, and they should give you, okay, now there it is. Now, this will become a no close bar. Now, because of volatility, I mean, I want to see them actually pull down and give another run back to the upside. All right. So let's see if they can pull down under this price level If the mid is located inside the prior bar, so if this mid is located inside this bar, then there's a chance you're going to get the overlap. Let me open this up just a bit. All right, so want to see them trade under that price. Let's see, can we just get back under there? They're not closing under that price level. We'll go for about 20 ticks real quick. Something small, nothing too crazy. All right, so all right, there's a live trade for you. All right, now go under the price level here. No close under this bar. That's important. No close under the bar, and it should go further. This is the hard stop bar. I'll try to take a couple more for you, just to entertain you. But you want to try to get the mid above the bar's high. That's important. And there should be a couple more examples of this happening, because if that mid is not getting above that high, there's a chance you're going to get the rotation back towards you. So it will come back towards you if you saw that this mid did not get above that high. Here they come. All right, and that's just overlap. So these bars can begin to overlap if that scenario, which is the real participation, if you do not see the real participation show up, you should expect to some degree some kind of rotation, some kind of give back. They'll give back the gains if the mid is not clearing that high. It's not about them just breaking the high. It's about whether or not the mid of the bar, because it's just tug of war, and that's all it is. If you get enough momentum coming into the market, enough speed happening into the market, that they can pull the means of the bar. Let's just say the means, the mid of the bar, the tug of war line. If they can get the mid of the bar above the high of the bar, that's real participation. That's all. All right, now let's yeah, here come the give back. Now I'm gonna give it a couple seconds, then we're gonna go backwards and look at some of the information that I've covered so far. We're gonna see what they do with this price level. Let's just see if they'll not close under it. Let's see. As long as the mid is inside of the prior bar, you're getting the back and forth. You're getting that overlap. That's all. That's something that you need to know. So that way you can kind of anticipate your entry. Like, hey, I know it's a chance it'll come back because of this. Okay. It'll come back just because of that reason alone. Let's see, can we do it one more time? Let's see. If this bar, the next bar's mid get above the high, we'll take another one. Now there's other ways of getting in it, but I'm only taking entries based on what it is that I'm trying to present to you right now. That's all. But there's other ways to get into this these trades. It really is. Just want to wait for the real participation to show up. That's all. Now clearly if the next bar start, this will be the hard stop bar. So let's see. Let's see if they'll do it. The mid is inside the bar. That's not what we want, because then you get, again, you get the overlap. We don't know how long this can last. This 10 seconds in and they got that mid beneath the bar's high. We don't want to deal with that, because it could drift down even further. It can rotate back down under here before it goes again. All right, so I just kind of want to fire off a couple trades for you. I already did one kind of based on them not closing beneath this price level. That's the setup. No close beneath here, you can go back up, and that's important. All right, so they're not doing it, so we'll just wait. All right, so we'll wait. Now while they're doing that, let's go do this, because I do want to cover the chart, because I actually we'll come back to that. I promise you. I actually did I did so much drawing on this chart. I definitely want to cover it. All right, so let's kind of go back here to where is it that I was at? Let's go back here, because I drew the chart up. I don't want to not cover this. Let's do that. Let's go back here. Yeah, that's the F. Okay. All right. So here's the day with the FOMC. All right. So yeah. So here we go. So time is important. Time is important. Something I really want you to make sure that you remember this part. Really, really remember this part. It's irreversible. All right. And that's for the duration of how long it's supposed to last. That's important. And so your past has a present and then a future, and the present is the overlap. Just kind of keep that in mind. Remember the present being we're not going to go to the distance yet. That's all. But unless they take out your past, this will show up. It's going to happen. All right. So really important. So I did try to mark out some statics on these turns just to kind of put it in perspective. It turning, it can happen at levels that's important. Now, there's a trend here. I just explained to you what the trend is. There's a trend, and that's the trend distance up here. Okay, now they can make the trend two different ways. Well, the trend distance. it can come off the center of the trend or pullback, if you will, and then of course off of the trend bar. Okay, now again, when you mark the trend, it starts here because this bar's low. Okay, that's 54, 454, and this bar's low is 454. So that's even. So you ignore any bars in between. This is one. They all have to be higher than the prior. That's two, three, four, five, and that's six, and here's seven. Let them pull back and they should give you that trend distance. Okay. So it didn't quite get all the way here, but you can still count it because they gave it to you here. All right. So it's either pull back and give it to me or go right off of the trend bar. Now, this is the trend down, kind of the same ordeal. You can see wherever it goes trend, there's a trend distance associated with it. I just didn't mark trend distance there, but you get it. There's a trend distance, it made it. And here's another example. This one failed. This one failed. And then, of course, you had a trend down here, and that managed to produce that distance. Then they put a trend down. They made the trend distance. Okay, they made it. They made it, and definitely off of here, they made it. All right, both scenarios is there. Kind of want to give you some of this information here, and then we'll take a look at the real time. Now, here's roughly 750. They're bottoming out, turning it around. All right, and there's the up, and you don't see a downtrend in any of this. All right, so this will be bar one. That's one, two, three, four, five. That's not a trend down. It should keep going. All right. Don't believe all of that. This is the present. All right. They're supposed to give you a future. So don't go with that. And see, these highs are being broken. Even if it's just by one tick, you have to start over. So then this is one, two, three, four. That's five. And here's six. That's not seven. It should go again. Now, I put lines here on these no close bars. I put some lines here, all right? Only because the FOMC is coming and I want to show you what this would be. So if you're trying to pick it up, if you're someone that, want to just step in front of it and kind of pick it up and go the opposite way, totally up to you. But I just want to highlight where you could do it and how you could do it. Okay, a couple of no close levels over here. We set a trend down. This is roughly about 1045. They pulled up, and the trend bar got locked in here. I'm sorry, got locked in here. I measured the distance though. All right, so one, two, three, four, five. That's six. You don't count any of this in here, and then you get the seventh one here. So that's a trend center of your trend, and there's the trend distance. Kind of got almost. Yep, they made it. They made it. Just put a couple other steps in there. We had a trend here, center of this trend. Okay, yeah, they almost made that distance here, but they definitely made it off of the pull back. And then they made another trend down, which was on this bar here. Okay, so that was your trend bar. There's the trend distance, got close, but then lifted up. Okay, they lifted up and gave you the trend distance from this trend. All right, they didn't want to break it straight away. All right, they didn't want to break it straight away. They pulled down into the center of that trend, lifted up, and gave you that distance that they made here. So it's always telling you what you can make. All right. And then they committed to making that trend distance down to below that trend. All right. Now, here's another trend back up. Here's another trend. Now you're kind of creeping up on the FOMC here. Here's the trend distance. They kind of leaned down, gave you the trend distance off the center of the trend, kind of move right back up into the center of that trend from above. They didn't break the downtrend at first. They didn't. That's over here. All right. Let me just put like a little line on this so you'll know when they break it. All right. So that's the trend there. All right. From over here. Let's go back this way. They didn't break it right away. Kind of came down. FOMC came in here. Kind of came down, hit the center. They hit the center of your trend here. Okay, let's do this. And then they popped up. All right, so that's when they blew that down trend. Turned around, made a trend down, and of course you had a failed trend distance. They didn't want to do it. They got back above the center of this trend, made a trend here, and you projected off of the trend bar or either the center of the trend, and they kind of moved straight away to that trend distance. Let me mark that so you'll know they got there. All right, so here's the trend distance here. Don't want to be before you long. We're gonna go back to the real time. So they made that trend distance. All right. And again, I didn't mark any downtrend because it was never a downtrend after that. All right. They just kind of kept going. All right. Now let's take a look at this information from yesterday. I believe that's here. And then we'll look at some of this morning information. They turned it around. There's the trend. Here's the trend distance. And again, that's 7 bars. You go 1, 2. Did that one close higher? Nope, I'm sorry. That one did not close higher. So we're going to have to do this. All right, so let's just kind of do this. And we're going to adjust this just a hair, kind of go up just a bit. And so that would put them up just a little bit higher. So let's do this. All right, so let's give or take, roughly, give or take. So that would be something to that nature. Either way, you see that they made it. They were even. I thought that that was different, but they're even. So yeah, so there you have it. So that's that. Yeah, so that's 1, 2, 3, 4, 5, 6, and there's 7. Yes. So that actually made it. Give me 1 second. All right, sorry about that. All right, so yes, they still made the distance. All right, so let's just kind of put this right here. So they still made that distance off of the pull bar, pull center of the chart when they pulled back. See that big bar right there? They pulled back, and then of course there's that distance there. Now, no downtrend, nowhere in sight. You just hold the trade. You can count the bars. I already done it. You can count the bars. There's no downtrend in sight. All right, now see here, 1, 2, that's 3. 4, 5, and that's 6. That's not 7. It should go up again. All right. Now you did have a downtrend here. Eh, they made the distance off of the center of the downtrend. They couldn't get it straight away off the trend bar. All right. So they kind of pulled up to the center of that trend, made that distance, give or take. I mean, it's just a handful of ticks away, but then turned around and wiped that out. And now here's a downtrend for you. And they're making the distance. They jumped up here. This is not 7 bars. It's not. It's 1, 2, 3, 4, 5. That's only 5. That's not 7. So they gave you the trend distance down with volatility. Now this is after 9:30, so your distance actually changes. So you get a little bit more bang for your buck there. All right. Now here's the center of your trend up. There's the trend. There's the trend distance, and they made it. All right. So they pulled back and they made that trend distance. Kind of gave you a trend down. Here's the center of your trend, and then of course they made that distance as well. Then they gave you a trend back up, and it's kind of again just monotonous. One of those things where they can go off the center of your trend or off of your trend bar. Really important stuff. All right, now let's go here. Now that spike, I did want to tell you about your spike here. So you could have caught the spike from the static at 15. Okay, so that's 15.00 up to the 25.00 or 25 up to the 35. All right. So one tick outside of each zone exclusively. So one tick outside of here for the fade, one tick outside of there for the fade for those that want to know. I know it had like about $1,500 in that one bar. Yeah, about 1,400 bucks in that one bar. All right. So that's that information there. Did I mark up the chart any bit anymore? Just wanted to show you. Let me make sure I covered that FOMC because they did a lot of back and forth. I know the phone just wrong, so I don't want to. Okay, yeah, that's that. Yeah, because the FOMC dropped back down. Yeah, I wanted to tell you about that. The FOMC kind of dropped back down, hit the no close levels. All right, and that's from that pivot over here. All right, so we're gonna kind of bring this in focus here. So that was from over here. So if you're someone that, again, just wanted to pick it up and try to ride it back out, that's the no close bars over here. And so these price levels are important. So you could easily mark these price levels, all right, easily if they were to break that trend up. Just mark those price levels, see if it would still honor what's over here. And it would have traded right into the price level. I know it would have made a trend. It absolutely would have. Again, if you're trying to counter the market, that's a way of going about it. All right. Now, I don't promote that. Again, this is all about the trend and the trend distance, but I do want to put in front of you, in case you're a little bit more advanced trader, that's another way to use the information there. Now, they're trying to get back to it. Let's see if I can do this again for you really quickly here. We don't have the mid above the high. The no close is back here. They kind of came under there and they hit that no close, but they didn't close beneath it. Let's just see what we can do really quickly here. We can get that high. I can see that that mid will get above that high. Let's just do that really quickly here. Want to find the real participation. That's all. Want to see if we can get that going. Almost, not quite. Almost, not quite. All right, they don't supposed to come back under that green bar. So this bar right here, if they're going to try to get there, if not, they may want to take a dive a little lower, and we don't want to be around for that because it's supposed to run straight away without they're pulling the mid right back into that bar. Okay, we're not going to stick around for that. That's what we're not going to do. So because they can very much come down here, test this no close bar, and then go back up. Now I do suspect they're going through this high, absolutely, because they didn't want to close beneath here, but I'm trying to give it to you based on that bar pattern. That's important. I want to give it to you based on that bar pattern. There's other price action methods that I know, but real simple, just real simple stuff. I know we were outlining the chart, so I wasn't here for it when they came down here, but I marked up the chart, didn't want to leave that information there and not at least cover it. So now let's do the real time for another, I don't know, 12 minutes. Let's do another 12 minutes, and then I will let you guys go. Want to make sure you can see this information in real time. And again, I'll fire off a couple trades for you as well. Try to do a little bit of that. Let's see if we can get them to turn it back around and give us that setup. We want to see if they can give us that setup. This is the no close bar, so they shouldn't be back down here. They should. They shouldn't want to do that. All right, so no sooner the mid get above the bars high, you take the trade, and we're gonna go for just a little bit more, being that we kind of tapped out of that one. But no sooner that mid gets above that high, you go ahead and just get in the trade. If it comes back into it, we know it's going to get chopped, and we don't want to be a part of that. All right, don't want to be a part of it. We can just keep that mid above that bar is high. Nope, they're going to chop us. All right, so they're going to chop us. I'm going to go ahead and cut that because they're going to chop us. They're going to chop us. Let's see if they'll lean under this information here because I know this is the no close level. I really want it from at least somewhere into this bar. I don't suspect that they'll get back here unless they plan to go down. Let's see if they'll do that. That mid is falling below the bars low. That's participation. They can bring it down further. So you don't want to stand in the way of it. I'm not going to short it because this is an uptrend. So we don't short it. We don't do that. Absolutely not. All right. So 14 seconds left. Let's see what we got here. Let's go ahead and start because I know that mid should be above this bar's high on this next one. I want to see them get that mid above the bar's high, and hopefully this time it won't fail. That's a no close level, so they cannot want to close back above it. Yeah, they don't want to close above it. That's fine. That's absolutely fine. Let's see if they'll drive down. Let's see. Let's see. I'm not worried about his 400. We can get that back. That's nothing. That's nothing at all. The hard stop's supposed to be here. Realistically, I'm just playing it based on that setup, trying to see if I can just go ahead and catch that momentum, that push. Came a little close here, but then didn't want to do it. They broke the high. And of course, you got to watch out for that too, because sometimes they'll break the high, go like a tick or two, and then turn around and they won't give you the consecutive closes outside of it. But as you can see, if the mid, and that's the thing, if that mid is inside that prior bar, you can get ran over. Absolutely, there's no question about it. It'll draw down on you. We're not going to go down just yet. Not going to do that just yet. And we'll get back to 400. I'll take and get us back. We'll get back that 400. Not a problem. Not a problem. Let's count our bars while we're waiting. That's one. That's two. This is a no close level here, so this is important. Let's see if they want to get back above here. Let's see. If not, they may want to make a downtrend. This is three. If they can close the bar timer down here. 1 second left. Let's see if they can get this back up. They should come down a bit more. They should. Yeah, they broke that new high. That's all it is. Typically, when it comes to the highs, I don't want to give you too much information because it's all about simplicity. When it comes to new highs, you want to see if they can give you two closes immediately right outside of them, or per bar. So on the bar's lows, you want to see, or the highs for that matter, you want to see if they can give you consecutive closes outside of them. We're gonna give it a second here and see if this next one to do it. That's a no close level, so they may not want to close above it. I wanted to see if they'll close above it and then maybe test back down in the bar. Okay, that's saying that it'll do it. So let's just see if they'll do this time. Let's see. That's a no close bar, but this right here don't make sense to me. I think they can take this out, but we'll take it. It's saying that it's there, so let's take it. I don't think it'll work, but let's take it. Win, lose, or draw. Yeah, I don't think that this turn's supposed to work. Definitely the location to me don't make sense. Like, them running up there and not being able to accomplish that goal to me does not say that we're gonna get it done. All right, that's fine. That's fine. This should be number. Let's go with number four. Let's go with number four. Let's go with number four. Now remember, you can't do both, and that's important because one of them is one of them is not going to work. So if we're going to stay up, the down won't work. And of course, now this could turn into a downtrend and trend down and keep going down. It absolutely can. But you don't want to go both ways because then you essentially you can lose twice as much. So you kind of have to commit to a direction that would make the most sense. Now, if we don't go ahead and get to going up like right now with this no close, okay, they came back off that low and they didn't close beneath this price. That's good. Now, if they close another one, there's a chance, yes, they definitely going to come and take this out because the no close pattern from above is being honored, and that's something that you got to pay attention to. You want to see them go back and take those price levels out. And that's why I said this one to me just didn't make sense, but I'll take it because the signal is there. I'll just take it. I have no problem with that. I jumped the other one. I did jump it because it didn't quite commit. I just jumped it, but it's okay. It's just all it's all about just taking the setup. That's all I'm doing. Just taking the setup is there. I'll take it. Now to the downside, yeah, I could take this setup to the downside and scout my way back to 400. Absolutely, but I want to see if they'll do the up one more time. I just want to see it. See if they can get back to that up, because I think the up just makes a little bit more sense to me. Just makes a little bit more sense, given the occasion. Now let's see if they can do it one more time. But if not, they may be wanting to make a downtrend, and let's see if they'll go down. Let's check this close. It's that second bar that didn't close under that level. Close 47. Close 46. So yes, they closed. So that's another bar down. So that's one, two, three, four, five. That's five. Let's just go ahead and because they can this going to be six, and then it'll be seven, and then next thing you know, they could be down a bit more. Let's see. Let's see if they can we'll just do it like this, because this will be six. I'm gonna just kind of move this down a bit, because if they want to do the trend distance down, there's no reason not to go for that. So let's see. There's no reason not to go for that. That's six. This will be, if they do another one, the center of the trend will be somewhere up here. Let's kind of do this just a bit. Let's cover this one. I know the center of the trend will be somewhere in this middle. That's six. And see if they can get under this price here. Kind of getting ahead of myself with the downtrend. It's not going to offer me that much, but we can probably take out probably about, I don't know, $200 of what we just lost if they're going to try to commit to a downtrend. That's six. We just need one more lower. And so there's only a couple ways to go about it. It's only a couple ways to go about it. It's either off the center of the trend or off the trend bar itself. So the center of the trend will be roughly here, somewhere in there, if they're able to make another red bar. Let's just see if that'll come about. Now it's only six, so they can turn around and go back up. I'm not crazy. I know they could turn around and go back up, but for illustrative purposes of just showing you, hey, if you see it happening, you don't have to wait until it's so far down the board. You can go ahead and just attempt to go with them while it's happening. Now they're probably giving me my setup right here for the this is only six. It's okay. It's okay. I can assure you, it's okay if it don't work. I understand. It's okay if it don't work. Yeah, see, that's that setup for the up. It's only six. It's not seven, so it can. It absolutely can come back up, people. It absolutely can. Yep, this is the setup for the up. Let's see if it'll hold. Let's see. I know we got a couple of levels back here that may cause a problem. And again, they can do that distance, get right here, just under this information right here, and then turn it right back around. So I'm not expecting them to stay down at all. Actually, I do expect that if they're going to keep doing this, that they will run the stops here. They will, and that can get us back some of what we lost so far. No closed bar. They tagging it. That's the hard stop. They don't want to hit that. Let's see if we can get one more bar down. And I'm projecting it off the center of the trend that they'll set. And I just want to get there. I'm not going to try to go for the distance of the seven in total from the seventh bar. I'm not going to try to do that. I don't think that'll be what they'll do. So I just want to kind of get to here from off the center of what that downtrend would be. Now, if they can't break this, then I'm definitely not interested in holding it too much longer past that. No close bar. Let's see what I mean. They're kind of doing it from this side as well. Let's see. Both of them can't stay in place. I know we still have an uptrend in place, though. We do. Mhm. All right. So yeah, they may want to actually stay up. Got this no close level. I know they tested it. That's why I went with the stop here because they actually hit it and came back off of it. So I believe if they are going to make this distance here, this price level here should come in. It should come in and support the move down. It should. And they can very much do it with this one as well, but I know this one has proven itself. They ran up on it and they turned around. This one is actually acting like it want to do it as well, though. Uh, I don't want it to suck itself back up into the bar like it did with the longs I took. I know I put on, and then that mid came pulling right back into the bar. See how they pulling that mid right back up. Don't want to do that. It's too close, just too close for me to do that. I thought that they could finish on its low, finish on your low, 5 more seconds. Yeah, see, they're not wanting to close under this bar either. See, that's a no close level as well, and they're not trying to close under it. So might be in trouble. Maybe heading, get ready to head back up. Because remember, we only have six down. I'm getting in front of it. That's all. Trying to get in front of it just in case we actually want to make this distance. Because I don't want to short further down here. I don't. I don't trust them to do the right thing. If I did that, I don't. If they trigger these stops on these guys, then yeah, we'll have a problem. Now, this price level is proven that it can hold up. Definitely, if they can kick these stops here. Yeah, let's see if we can get down in there and get that money back really quickly here and get out of these people way because I don't want to be on here too much longer. Just want to see if we can get right down near that target. The mid is falling below the bar's low. That's what you want for participation. You want it to get that mid below the low. Now, this is a no close level, so they can respond right here. They can. Let's kind of pull this forward. And we have another bar here, lower. So now we got a trend. All right, so that's the trend. And give or take. Give or take. Just looking for them to take out this stop. No sooner they do that, I'm gone. No sooner they take out that 28, let's just put a line there so we'll know it got triggered. If the mid can fall beneath the low, that is the participation. That one didn't do it, so we may get a little overlap here unless they can run straight away. Unless they can run straight away, we may get some overlap. Yeah, see, the mid is still inside this bar. They can overlap the information here. That's all they're telling you is information, what they can do. And we know we have a no close level here. Let's kind of drag that forward too. Just kind of bring it all together. Let's see if we can get to that trend distance. Don't like dojis. Don't like them at all. But that no close level, that's important. That's showing up right now. They're responding to it. Refresh this chart. I know it's like 9 o'clock. I don't want to hold you guys too long, but I want to show you it's really simple. Just go with what they're telling you, and you should be just fine. That's all. I got a jump start on this downtrend. I didn't quite do it the way that I would suggest you do it. But if you want to go about it this way, you can do it like this too. And that's the trend distance. They can possibly make this. All right, so they're there. All right, so we're going to tap out right there. All right, so we got the money back. All right, now they managed to go ahead and get beneath this low. This is the trend distance. Well, I can hold the video for another second or two to see if they'll actually make it. I can do that for you. See if they'll actually make it. They kick the stop. Hold it just for a second. We know off the center of this trend, because they can come back up. And that's the thing. They can come back up. I kind of got in front of it, but they can come back up. This will be the center of the trend. And sometimes they'll set the center of the trend before the trend itself. You can kind of see the price action kind of saying that, hey, this is the center of what we're about to do. And that's kind of how I wanted to go about it, because I didn't want to wait until they get like way down here, knowing they could rotate back to the upside. And I didn't want to be too far into trying to short down when they could possibly wipe the downtrend right back off the board. So that's what made me want to kind of get in it early. I saw them, basing out in here. We had a few bars in it, and I can see what they're doing. Clearly after they broke the high, that wasn't, too close to straight away. And with them honoring the no close from above, okay, and that was the other part. They're honoring it from above, as you can see. No close was there. They honored that. They even honored this one. I didn't want to wait until they set the seventh bar and then try to get in it. Now, they can very much just go straight from the seventh bar and just run all the way down here. They absolutely can. It's not a question of whether or not they'll do that. I do believe that they can. They can actually run straight away. But I just want to kind of let you know what made me take it from in here based on that information. Is just if this is going to be the center of the downtrend after they make the trend bar, what if they didn't want to lift back up, which they didn't? Here's the trend bar, and they're still going. And so that's what made me want to get in it early, and definitely to go ahead and take out these stops if they're not going to stay up. So that's how you play that information there. They only got to get down to what, oh 08, somewhere down at 08. All right. So, but anyway, I hope that you guys have enjoyed the information there. Again, I tried to throw in a couple live trades for you as well. And it's very simple. I want you to know that, but you need to have a procedural way of doing something. That's the most important part of it. You don't want to have, a lot of different approaches when it comes to trading. You want to make sure you're implementing the information that constantly reveals itself over and over and over again. So that way your confidence will be built around the chart model, what it's actually doing, what it's saying that it can do. And you can, of course, use other techniques if you want, timing techniques. If you want to use oscillators, volume, whatever it is that you want to use, totally okay. But the most important thing that you need to know that your confidence need to be in in frame with the information that's there. What's happening right inside the chart? You need to be right inside that when it comes to how you perceive the information. You need to make sure that your mind is interpreting the information that they gave you before you go layering on more information and building reason as to why the market is moving. Build it based on the content that's being presented, and that's all. And then from there, of course, use whatever tools that you want to use. Totally up to you. Again, I have indicators myself, but I know that the indicators they're just displaying to me what I want it to display to me, and that's it. It's the market is going to do what the market does. It's going to go up and it's going to go down and it's going to go a distance that it's telling you that it's willing to go all the time. And it does it every day, no matter whether it's news, whether it's 9:30, it doesn't matter. It's going to do the same thing. So I hope that you guys have found this video somewhat informative. If you have any questions, you can leave me comments below. Ask me questions. I don't have no problem answering any question that you may have within the scope of course, the content that's online. All right. So if you want the indicator, you're more than welcome to pick the indicator up. I also really only want to provide you guys the chart scale and the ranges because that's free. So you're more than welcome to email me if you want the ranges or the chart scale. Just email me. I'll send that over to you. It's free. That's really all I want to do is give you some free stuff. But if you do want the indicator, there is a cost to it. But email me and let me know if you're interested in having the indicator. It has various different functions to it, and I'll put it below the video here, explain to you some of the functions that I do have associated with this indicator if you want it. You don't have to purchase it at all. I'm not here for that. Want to give you some free stuff. All right. So I wish you all the best with your trading. Take care.